Good morning and welcome to Equity Story, the 4th of January. We've got Claude and myself today on a Wednesday, and we are going to talk about, we're going to actually bring in a new segment, Claude, that we are going to follow with for the rest of the year. Hopefully people like it, and it's going to be called Thought of the Week. So we're going to have one each. We'll talk about what's on our minds and see if there's stuff that maybe we can follow through and maybe buy or sell or whatever. So that's going to be exciting. We're going to talk about that. There's a couple of stories we're also going to talk about, and that is Mika from yesterday, and you want to talk about M7T. So that's coming up. Before we start that, disclaimer right in front of you. We've got pretty much everything we talk about is general in nature only. So any stocks are based on technicals and fundamentals only. All right, I'm going to switch the screen off to looking at my screen on charts. So let me just do that quickly. And let's start with the two announcements. And well, for one announcement, one you want to talk about as a story from yesterday's announcement. So let's do that. Can you see the screen of my charting at the moment, Claude?
It's sort of loading up, it seems.
All right, good. All right. Whoops. Putting the wrong thing. So I want this. Apologies for that. All right, so let's go through Mika. So yesterday come up with the update. That's the one we've been sort of waiting for, right?
This is Matter, yeah.
Yep, I'm going to change that right now. So I'm going to look at Mika, and yesterday's announcement was Turnberry update on the resources. A little bit underwhelming, I have to say, and I talked about it yesterday in the ATA. That I thought that we needed a little bit more out of it. 75,000 adding on ounces for a resource that was 610 to 685. It just wasn't quite enough for me. I was expecting a little bit more, especially when the build-up was probably a bit more. Anyway, look, it wasn't a disaster. It was okay-ish, but I expected a little bit more. That's why the reaction was pretty muted. Still, good news is gold is still pretty strong. Mika is still a story probably well worth following with its drilling results and more things to come over the next, say, 3 to 6 months. However, if you were in the story of Mika, you've got probably a choice here, technically holding, or if you are making some profits, if you bought it in the 6s or early 6s or maybe 5s, you'd probably maybe take a profit and move on to something else. So short term, maybe a little bit of a going sidewards, longer term, probably still okay. Valuation wise, I think we looked at it yesterday, 70 million market cap for what it is at the moment, 1.2 million ounces. Looking at some more drilling, possibly, coming up with studies. Yeah, look, probably right where it should be. Like I said, I think at the moment it's a hold technically, but I can understand people moving on to something else to play with for the moment until we've got more news coming through. So that's Mika for me. But there was also yesterday announcement from M7T, which I also like as a company, but I'll let you, Claude, talk about that one because you actually own some. Go on.
Yeah, that's right, Peter, and good morning, everyone. Yeah, I own just a few shares in M7T. What it's got going for it, and the reason that I own some is I really love to invest in healthcare software just because essentially there's a double tailwind there. So there's obviously, a digitalization process that's going on with big companies. Healthcare companies tend to be pretty slow to move on that. So there's still a long way to go there. And of course, as they do reach scale, and once they do reach scale, software companies can generally earn pretty good margins. So, it's in the right space. On top of that, it sort of recently looks like it's crossing over into about break even. And look, the good news that came out yesterday was that they announced their biggest yet contract win, which bumped the share price up almost 20%. The contract win will definitely help them out a lot in the first year. So in FY 2023, this is expected to generate most of its contract. I think it's 9.5 million in the first year, from 7.5, sorry. Then with they're pretty much around 9 coming in the next 9 years. So it's a 10-year contract, and that's weighted to the second half. So that also does remind me of the weakness in Mach7. Tends to have less impressive contracts with less impressive customers, as is the case here. Looked up the company, Acumen, that they've done it with, looks like a pretty not that great company, radiology company that's still making losses, does have quite a bit of scale though. And so That's yeah, like it's a positive for sure. Still reminds me why Max 7's not really the best sort of software company or software setup that you can get, but it's reasonable. And this bodes well for FY 2023. Offsetting that, you have the fact that it's undergoing a CFO transition at the moment, which is just an automatic orange flag for me. So I'm not buying it, especially after this increase. It's more of a long-term, you know, why I'm following Max 7 is because, Peter, look, there's three general ways this can go. One, it could just fail completely, run out of money. Turns out it's not really going to be a profitable company ever. It's going to go roughly towards zero then. Another way it can go is it sort of reaches profitability, but it's not a great company. And it's only really capable of making smallish margins, implying that it's a bad quality software company. And in that case, you probably get out without doing too much damage. Its market cap's about 160 mil. You know, you could imagine these guys. Yeah, so to put it in perspective, just sort of the size of where the company's at the moment, the revenue for the last year was about 18.6 million. That was down slightly on the year before. Most of its growth has come from acquisitions. I'm not trying to say this is a good quality software company at all. Probably this is my base case, is it's a bad quality software company. And you know, they've just said they've got a contract that is going to bring in 7.5 million in FY 2023. Their full year revenue last year was 18 million. That's a big chunk up front. So even if this is a medium to low quality software company, it still looks like to me FY 2023, there's a chance that it sort of starts looking like a good software company, because given that the contract win that they've just announced, it's quite likely that they're going to have good revenue in FY 2023. In that case, if they have any brains at all, if they have any ability as management or half a clue as humans, really, they will control their costs in this environment. They should already be doing that. If they get a big contract win, that should drop down to the bottom line. We should see, in my view, I'm looking to see a profit this year. So if we do see a profit this year, I think that it's quite possible to, you know, to see a 10, 20% profit margin this year. We could definitely see a couple of million profit. In that case, I think it starts getting pretty interesting pretty quickly. So you could see in a year from now, it looks like it's on a PE ratio all of a sudden. It's no longer a loss-making tech stock. I think that could get a few people interested. So that's why I like it. That's why I'm interested in it. Having said that, too many bad signs about it for it to be a conviction one for me at these prices. When would it get conviction for me? Well, given that I think this is a medium quality software company, the conviction buy for me is if you can buy it on like 20 times earnings or something like that. With all likelihood, it's going to eke out a bit of growth. Most medium quality software companies, you'll be surprised how long they can live. Once they reach profitability, because they're in there with maintenance contracts with a degree of recurring revenue, yeah, you'll be surprised how long these things can live. You're always encountering weird little bits of software. Sometimes I've encountered as an analyst of software companies. I don't think it's listed anymore. There was a company called Techniche years ago. It had software that was sort of there from the 80s or whatever. So it can be amazingly sticky once it's in there with these business to business. So that's why it's an okay place to play. Max 7's not there yet. It's not a great setup, but it's one worth watching.
I've got a couple of questions for you with that, right? So first one is, what is the possible market here for these guys, and what is the possible upside? So for example, I know you're looking at this because you've still got some, right? And you make a very good point here that, but probably still a little bit too early to really go fully at this, invest into it, and maybe you're gonna wait for the quarterly, wait for the half-year update. But can you sort of envisage what the market size or market upside is on this?
Yeah, so look, it's a ton bigger. So for example, these guys compete sort of with Pro Medicus, different kind of clientele. These guys are catering to people who are more cost conscious, more likely to be wanting to buy a license model, have less money, not necessarily want the best technology that's out there. Look, Pro Medicus has recently upgraded the size of its market, total addressable market, suggesting that, it can at least 10x from where it is now, even in just the US. Now, these guys aren't as focused in the US, they're more global. That's where you find more of those healthcare systems and hospitals that do want the cheaper upfront license fee stuff. For example, government funded healthcares and hospitals tend to be more likely to want to pay a big license fee and then, maybe a smaller maintenance and support fee. They don't want to do the transactional model that the for-profit or very large, best in the world healthcare systems in America, they want to use, they're happy to use one that's transaction based because they want to use the best possible software, and they can understand the economics of it. They're like, they make X amount of revenue per radiology scan. They're happy to pay like sort of a fixed amount per scan, and they know how that's going to affect their profit margins. It's not a problem. So these guys definitely have plenty of room to grow since they have 18. I don't know the exact size, but they're definitely focused on a much bigger set of potential buyers than Pro Medicus is, given Pro Medicus is premium. Of course, that means also the profitability of a per customer basis is a hell of a lot lower. And on top of that, you don't benefit so this actual recent contract win, they probably do benefit from the fact that it's growing. I looked at its numbers, it's growing strongly. I assume it's doing acquisitions. In fact, it definitely is, because that's partly why they're moving, disparate systems all to Max 7. So this Max 7 is going to benefit less from that idea, like say that Pro Medicus, which I own a much larger holding in, that benefits from their customers going out and gobbling up the competition because they have the most efficient. By definition, the companies or the organizations using Pro Medicus as Visage are going to be more efficient, more profitable radiology, all else being equal, radiology businesses than Max 7, because they can just leverage their radiologists way harder by having them go faster. They can attract the best radiologists. They're just going to have an easier time of it. So the actual size of the market for Max 7 still is massive. They can definitely grow that top line. Profitability is the big question mark over this one. Once you're down off that top tier, if you're really in the mud competing with a whole bunch of different providers, your profit margin starts to, potentially disappear. So it'll be important to see that profit come through, and they're not there yet. I bought some shares just because they've passed that cash flow inflection point break even. Look, I'm sure their cash flow is going to be insanely good if it follows the normal pattern where they get paid up front a big chunk. Their cash flow is going to look really good this year as well. So that's fine. That's not additional good news. Let's see if they can get the actual profit. If they can, and the share price was lower, for example, that would be kind of a setup that I'd be looking for. If they do hit the profit, but the share price goes up to $1 or something like that, I'd potentially just exit, or maybe just hold on for the ride. And then look, the final possibility, which I think is very small, is that this actually turns into a well-run, solidly growing, profitable, what you'd call a high-quality business. It's possible. It's not impossible for some software areas to have just a bunch of high-quality companies in a kind of oligopoly. That might be where we're heading long-term. It's possible. These guys are super small. You wouldn't claim it yet when they've got $18 million revenue. But at the same time, if we see solid revenue growth, and that you wouldn't rule it out completely, and that's the upside you really want. If this company can just keep on growing its revenue year after year, and in a few years we're looking at a company that's doing $50 million revenue on 20% NPAT margins, that's going to look super attractive. I don't think that's not my base case. My base case is that it's probably like more of a 10 or 15% profit margin kind of business, which is quite bad for a software company at maturity, but let's see where it can get.
I'm fascinated because you love your Pro Medicus, right? And you've been a long-term investor in Pro Medicus. Do you remember when you're first looking at Pro Medicus, what was your conviction like for Pro Medicus? Were you much stronger on Pro Medicus than you are?
No. I was stronger. My initial position size in Pro Medicus was, significantly larger than what this one is, but I was pretty scared. I was pretty concerned because there had some similarities. So for example, at the time that I bought it, Pro Medicus had just flipped back into profitability after a long period of reinvestment where they sort of went into loss making. And it was a bit of a different situation because also what had happened is that Pro Medicus had won a very big contract, which was actually more than twice the size of this contract Max 7 has won several years later. Mm-hmm. Pro Medicus when I was first buying, Pro Medicus had a market cap of about 100 million. Max 7 has about 160. So, but I still recommended it when it had about 160 million market cap. And it had just announced a 40 million contract. It had a higher level of existing revenue though. So the setup when I first bought Pro Medicus, if you put the two next to each other, Max 7 today versus Pro Medicus back then, you'd choose Pro Medicus every time. It's just got more revenue. The contract that it had just announced was bigger, more than twice the size than the one this had announced. Similar in the sense they both announced their biggest contract win ever though, which is always a good sign. And on top of that, you had, say with Pro Medicus, there was like repeated director buying. I think that the company had a buyback as well. So like there was a lot more signs that the smart money thought that like the stock was undervalued. And probably the biggest hang up there was the stock had just doubled since I started looking at, basically I started looking at before it won its big contract, it was at 40 cents. It run its big contract. It also sold a business. It sold a business for a massive profit and then like paid out a special dividend. So it looks better. It looks better for sure. So that's why I'm a little cautious of this at the moment. However, if things move over time and this continues progressing in the right direction, but the share prices goes in the wrong direction, that's when you could start to get a setup that does look a lot more like what Pro Medicus looked like back in 2013.
Oh, look, thank you. I wanted to pick your break on that because there's a lot of
an interesting
people
question.
are hoping for another Pro Medicus, right? So I'm just trying to see where, is there any similarities?
It doesn't look that good yet, but part of the reason I own a little bit is because, by the time this starts to look like it could be that good a setup, I definitely want to be on top of that because that opportunity might not last that long.
All right, fair enough.
If it comes.
Looking at the technicals, it's probably just wait for the moment. I know, you're holding for the moment. That's fine long term. But just technically, you probably want to just give it a bit more. And I'd say, personally for me, just wait for that quarterly, wait for that half year. I don't think there's going to be a huge rush to see that just jump, back to that dollar in the next couple of weeks. I could be wrong. You never know, but
I don't think
that you
my guess is it comes down. My guess is it comes down this contract, like it looks good for the FY 2023, but it doesn't make that much of a big long-term difference until we get an idea of how much profit these guys can make. Then sometimes you'd argue the good news from this contract win is sort of offset by the fact that they're doing a CFO transition anyway.
Exactly. So it's not as positive as PME but back in the day.
If there was like directors buying like all the shares they could get, then I'd be more positive for sure.
All right. Well, we'll see. We're going to follow this, of course, and we're going to talk about it in future. Now, let's move on to our new segments, thought of the week. And I'm going to start because you just had a nice long talk, so I'm going to give you a little bit of a rest.
Sounds good.
I'll go first, and I'm going to talk about evolution and gold. And I talked a little bit about gold and I think evolution anyway before we went on a break, Christmas break, thinking that gold could have the day in the science, so to speak. And when you look at gold right now, it is starting to look very interesting. So I'm going to put that first, the chart of gold first, so you guys can see what I'm talking about. So we've got 1836 at the moment, and you can see looking quite positive. And if we change it to gold in AUD terms, it looks, again, very, very good. And I'm going to put that on so you can see. So you could look at that. It's even looking even better, right? It actually probably finishes like that at the end of the week. This is a breakout. So my focus is then going, okay, I'm thinking about gold that's looking positive for the end of the new year. So my train of thoughts going, we've got a period right now in January where there's going to be some significant news flow from these companies, and that is the quarterlies. So I'm thinking, okay, gold's looking positive. Which companies can potentially put out a good announcement? We can maybe have a trade on this. And evolution, again, like I talked about before we go on a Christmas break, stood out to me because if you look at the last quarterly, and I am going to actually bring up the announcement because it is quite interesting. So just give me a sec and I'm going to show you. So this is the announcement from quarterly in September, and of course we've got to go coming up with the December one in probably in a week's time. So they're talking about here that quarterly production scheduled to increase for the remainder of 23. That's a good thing. They're also talking about that all-in sustaining costs and plan to trend lower over FY23. That's also good news, right? So those two things are pretty positive, plus gold prices going up. So fingers crossed, this is well set up. And I'm going to put in the chart now, evolution, and to show you why I think this is the one that we should be probably looking at as one of the probably the picks, right? So And then personally for the fund, I'm looking to actually acquire some of these. So this is also a disclaimer that I'm looking for the fund to look at getting some of these. Take it from around that $3 to that 347, 350 mark, somewhere around there. If of course they come up with a good announcement, gold is still quite strong. So this, I'm going to put a couple of disclaimers in, but you have to, because this can be quite volatile, but it's looking pretty good. It's recovered. So when you think about it, and we talked about a little bit about it yesterday, they used to trade double this price at about $6, and the price of gold was roughly the same back when they were trading $6. So they have, in effect, they are half priced from where they were. Admittedly, costs went up since then, right? In a year's time, that's fair enough, slightly, but I think there's still value in this. So that's why I'm thinking that I'm liking Evolution from that point of view. And they've got a bit of copper as well, which is also a little bit of a bonus when you look at the copper prices that are recovering quite nicely. So I've got a story here. Positive tailwinds, good environments, hopefully deliver a pretty good result on the back of the last quarterly that I talked about, and are profitable. So all in all, looking good. The only thing maybe that I'm thinking of, are they going to be surprised with more costs blowouts? Maybe. I know they had a new CEO installed late last year, so that's still, I suppose, a couple of question marks there. But generally speaking, I got a good feeling they're going to release a good result. So I'm going to have a punt on this, Claude. So I'm liking this as a thought for the week. And like I said, I'm looking for the next maybe 2 or 3 weeks to see where it's at, and hopefully we can make that nice little gain here. All right, over to you. Give me your thoughts on your thought of the week. What have you got for us?
Well, thanks for that, Peter. So today I thought that I'd just talk a little bit about, I guess, again, a similar idea in that I'm looking at it more as a medium term. What kind of like works now? What's an interesting place to go fishing? And also from a personal perspective, where could I sort of flesh out my portfolio a bit? Now, one thing that's sort of been working at the end of 2022 and may continue to work for the next 3-6 months or so is this thematic of mining adjacent companies. So this can often be mining services company, but I'd expand that definition to include something like RPM Global, which is mostly a software company for mining companies. And I just think that sort of in my personal portfolio, there's definitely room. My biggest companies are sort of, let's say software, education, healthcare, IT, software, finance, software, finance, software. And it's not down until like the lower half of my portfolio where you start finding some of the companies that are more sort of mining services, mining adjacent companies. They tend to be smaller holdings in my portfolio because they tend to be cyclical businesses rather than long-term compounders. But some of them can do quite well over the long term as well if they've got some sort of sustainable competitive advantage. And some of them are just like sufficiently cheap now that they're going to pay a good dividend and they don't need to do that well to be a good return. So I think it's an interesting spot that I'm underinvested in, and that has been to my detriment in 2022 because I wasn't quick enough to get on that theme. If I'd taken all the money I'd got from sort of selling tech stocks in March or April and putting it in these mining adjacent companies instead, of mostly seeing it in cash, I'd be a lot happier. And so I wanted to go through some of the names that are on my list of what I'd be interested to buy, what I call mining adjacent companies.
Go on.
Maybe the one to start with would be one you're familiar with and did call at a good time, which is MAD, Matter Group.
Yep.
This would be one of the high quality ones on the list. Also comes with a higher multiple, of course. So that's the downside there. Not as cheap as some of the others, but good growth prospects on the USA, quite arguably. So that's an interesting one there that I like. Working up the list, also got a company called XRF, which does testing. So it's very leveraged to the exploration and getting started with your mine stage of the cycle as well. And that one, I own shares in that. I don't own shares in Matter Group, but that one I quite like. And just lost my list here. Excuse me a second. Here we go. And then another one I know you like, Peter, which I still think is mining adjacent because I get a lot of their revenue from mining, would be SXE, which to me has been tempting as a dividend stock, which is a know what you hold it for. That's been tipping as a dividend stock for years. I've been watching this since it was 45 cents. Here we are at 70 cents. It's paid a dividend along the way. The returns have been great over the last couple of years. I think it's tempting me. Moving on, another one we talked about last night is CLX, which is a logistics and distribution company that is not very expensively priced, good dividend yield, good asset backing there. And again, you can see the momentum and demand has been there for these guys as well. So these ones are probably quite interesting to me. I'm very tempted just to put in a little, like there's enough good stuff about that I would be keen to. I put a little amount just for a long-term hold to see if they can keep creating value there, and just knowing that it's not too expensively priced. But I don't own that one, but it's just on my list. Now, over to ones that I do own some already. SNL is one that I think is a very high quality business, a distribution business. Again, not entirely mining related, but a little bit of mining exposure there because these guys do truck replacement parts. And obviously, like lots of trucks are used in mining and these guys are involved there. So maybe not as mining adjacent as some others, but also a very high quality business in that it is starting to build real competitive advantages based on having the biggest range and the best distribution network.
Buses as well, don't they? I think they've got buses.
They do buses as well, yeah. So this is probably less mining adjacent. All of these companies have only elements of their businesses that are exposed to mining, like, you know, Southern Cross, I can't remember what percentage it is, but mining is just a percentage of its revenue there. And in fact, one of the headwinds for Southern Cross is that they have some big mining contracts rolling off. So that means they're not expecting as much growth this year. Anyway, on to another one that is, again, just partly exposed to mining is Duratec, DUR, which is actually, I see, up a little bit this morning, which is nice to see. And I do own shares in this one as well. And yeah, this is one that I'm just going to hold it for a little while. Again, it's a medium-term trade. I think that they should be good in the short term. They just announced a contract win with, yep, you guessed it, BHP. So and that's showing they're winning with mining there. So that's good, or that's in line with sort of thematic that I'm talking about at the moment. And then finally, just another one for you. I know it's been kind of long. Is IPL, which is again not fully mining because these guys do electrical parts distribution. Oh no, IPL. Sorry, IGL. Nope. IPG. Sorry, I'm getting a little bit of ticket dyslexia there.
That's all right, IPG. I know what's funny. As soon as you mentioned electrical.
It's because it's called IPD Group, IPD Group, but its ticker's IPG, so it always confuses me. And yeah, look, these guys doing electrical distribution, essentially, mostly a bit of electrical services. So a bit of mining exposure there, and more just like pro-cyclical with the company there. So I don't know, actually, you might argue that the chart seems to have topped out there. So it could be a bad time to get on board with this one. But of the set that I just named, I'm definitely tempted. Like, I feel like I'm underinvested in this theme, which I feel like is probably a decent theme for another 6 months or so, at least. I don't want to make this the biggest theme in my portfolio. I'm always going to tend towards technology and healthcare because I think they're over the long term the best themes to be in. But just in the medium term, it's good to have something that's that is working at the time. So I'm thinking maybe top up on this theme a little bit, and there's some of the ideas I have. Oh, last one, which is possibly one that it hasn't quite hit my valuation, but I'm thinking of being willing to pay up a little bit for this one and maybe just upping my buy price just because I think it's a good setup, which is RUL. And that one I like because essentially it does fit this theme that I think is strong at the moment. And also on top of that, it does have that technology aspect, which means it should scale a lot better than the other companies that we've mentioned here. So I would argue maybe the upside's a little bit better if things do go well.
So which one is your strongest pull out of all the ones you mentioned, right? Which one you're probably the most going, oh, I got to get?
Probably the one. So I have previously written that my buy price for RPM Global, which is RUL, I've previously written that that's below the current price where it's trading right now. And I haven't updated that yet, but on my to-do list is to take another look at that valuation and just have a look at it. And to seeing the strength of the mining industry at the moment, I'm wondering whether maybe some of my forecasts are a little bit too conservative and I could afford to be a little bit more, optimistic there. And because if you look at the mining services area in general, these companies have been, a lot of them have been really hitting it out of the park. They've been doing well lately. So that really doesn't come through immediately with RPM Global, just because, you know, it's more of a slow sales cycle. They don't necessarily start their contract and then they're like boots on the ground 2 months later. It's like, you know, they do a contract win and then they do an implementation and then they start getting recurring revenue from that. And in particular, they've been losing out because it's not a big license sale. They are turning it into recurring revenue. So for all those reasons, I have a hunch that maybe this thing's not going to get down to my buy price valuation that I'd currently put out there. And maybe, like, you know, maybe I should just be topping up a little bit on it as it is. And so I have to say it was my favorite at the moment. And it's right on the list of stuff that I'm going to like have another look at, see if I've been too harsh in it. Is it time to update, you know, my valuation? And if so, do I justify the buy at the current prices or not?
Fair enough. And look, I think the theme is absolutely valid currently, because the charts are looking pretty good on pretty much most of them. And I know, saying that, probably the weakest one is RUL, but it's not the bad chart. It's just the weakest. The others are going, you know, quite well. And like you said, IPG is just looking maybe topping, maybe it's coming back to the trend lines, but I like all of them, really. I mean, you look at it, the theme is pretty strong. They actually also, most of them are not expensive either. They look pretty decent on the valuation wise. So yeah, I agree with you. I think this is a great place to have a look at some of these stories. So thank you very much for that. And I think I think this section is going to be quite popular. So thank you very much for that. We'll, you know, do another one next week. We're going to call it quits today. So thank you very much, Claude. Have a great day, everyone, and see you again tomorrow.
Thanks, Peter. Thanks for bringing in the idea to share. So have a good day, everyone, and hope you're enjoying Happy New Year.
Cheers. Thanks, guys.